Hello viewers, welcome to another edition of the Renko Edge, where we look at the week ahead in the futures market. Looking for trade setups, ideas, utilizing the Renko charts and other technical analysis indicators. If you're new to the channel, then welcome. Please don't forget to hit the subscribe and notification buttons for all the future content that I will be producing on the channel. So let's get straight into the charts. Now, I've made some changes that you will see, and I'm just about to share my screen. Here we go. Hopefully you will see that now. No, it looks like we're having a bit of technical difficulties. Good old technical difficulties. Let's try again. There we go, and it's up, second time lucky. So I'm just running through a few changes I've made to enhance the chart, so I'm not chopping and changing between other pages. So on the main page, you can see that I've added a indicator, a smoothing indicator to the stochastic to give us a sort of a trend entry type, or trend confirmation, call it. So for example, you see here where the fast stochastic K crosses up there through our filter, you can see a very nice up move there in the S&P, so that helps us decide there. And also if you go to bottom right, I've added in seasonality and also commitment of traders, and that's the long positions as well, so we can see where the large speculators are pointing in the sort of more longer term. Seasonality also good there. A lot of commodities work nicely with repeatable, predictable seasonality patterns. And then I did mention last week that I added on the Z score at the bottom of the bottom left there to give us an idea of how far prices moved away from the mean. That's set to 20, so that'll be 20 blocks that it be looking at. So with that, let's get into the charts, and we're going to start with the metals, and it's copper. And at the moment, after that big pullback, not a lot has changed. We had a bit of a buyback in there, maybe some profit taking. Let's just have a look very quickly at if it's hitting any key Fibonacci levels. Well, it did almost get to, as you can see, that 23.6% there, and it's turned south again, so maybe a move back down to 4.37, indicating the long term certainly looking bearish. Shorter term, we've got the 20-minute and 5-minute there, giving us different block sizes on the ATRs, looking pretty neutral and flat at the moment. Volatility as well, certainly down to lows. I've noticed that across the board really on futures, volatility especially low, even in the stock markets like the S&P 500. We're talking 9-10%, very low indeed. Large speculators looking like they're moving short again on the copper as well, so nothing too spectacular. Maybe a short-term pullback from, like I said, that Fibonacci zone back on down to the 4.37. Gold, still liking gold to that upside, still looking very good. We can see there in the stochastic and our filter all long, trend obviously long. Did pull back, probably profit taking in there, and looking to shift on back upwards again. Let's put on some Fibonacci's to get some idea of where it could go to. In terms of targets, we are talking next upsides 3,800, nearly 3,900. It can get up there. Down wise, we've got support here at 3,650 and the 3,600 zone. Seasonality wise, it used to be more seasonal gold. If you go back 10-20 years, it's all very bullish there. The large speculators also picking up once more, and in the short and medium term also looking bullish. So gold remaining a hot one there. And into silver, what have we got? It's going to be a very similar pattern. I won't bore you with running through all those details. Pretty much the same as gold. Let's just get some upside numbers there that we could potentially zoom in. Let's go a bit shorter term there. We're looking just over 45 and just over 46 possible upsides, but gold actually looking the stronger of the two at the moment. Platinum, nothing much to see here, and I think it's probably the same with palladium as well, just turning down in the short term, probably heading towards that sort of 100 sort of area. You can see there. Everything else looking bearish. Today though, a bit more positive start, and the detail below, speculators long, volatility coming down, but one of the higher volatility markets there, 45% nearly on the average. Nothing to talk about on seasonality. And then into some FX. After some strong moves against the US dollar, we're going to start to see this across the board at the moment, that sort of pullback from that range in the shorter term, feeling a bit weak to neutral. This is Australian dollar. You can see our bearish indicator kicking in there. I think it's going to be the same for the pound. Canadian dollar looking range bound. Let's draw on the Fibonacci's there. And blend the old Fibonacci's nicely. As you can see, stalled at the 7037 mark, then back down to the next one, 7287. Then you've got 7267 down there, and then 7443. In the short term, medium term, feeling a bit weak at the moment. Not much else to report on there. Japanese yen does trend nicely. Japanese yen in stages, but currently not looking quite as hot as it has been. Fibonacci's again on there, as you can see, pulling down back into that 38.2% Fibonacci zone there. So maybe we got a bit more price sideways action, looking negative on the stochastic filter. Shorter term, definitely feeling a bit more weak there to the downside. And let's go to the euro. Maybe looking the strongest of the bunch at the moment in terms of that up move, but you can see negated by there our stochastic oscillator there, looking a bit neutral there, maybe we'll call it, and actually flat there. Volatility just out the corner of my eye there, just around 8%, so hardly anything in it at the moment. That's annual volatility number. Yeah, not so exciting that the euro at the moment. Let's have a look where it could pull back down to. I think we could be looking pull back down to the 1.748 area, and then the 1.69. These next two Fibonacci zones, and back into that noise before. If the US dollar weakens off again, we might see that ladder upside play back in, but at the moment it's looking weak neutral. This was my pick of the currencies at the moment on the futures side. If you can get your hands on it, the Brazilian real looking still the strongest to the upside. And scroll back a bit, have a bit longer term, but look, going back to April there. Short term wise, we're probably a bit more flat, just pairing off. So I'll call it weak bullish at the moment. Volatility low, like most currencies there in the FX suite, and large speculators though, just looking at that, still building up. Obviously had a nice, really strong run up in February, as you can see there, and then starting to build up. What about some targets for that? Let's go those highs down to those lows. Further upside, 0.19 sort of area in here. Support 1.825 for a pullback, possible further bounce. Mexican peso, just trundling along really on up. Not a lot of volatility there either. 7% annual. Most indicators looking flat to weak bearish. Wrap up there. Swiss franc, not much. Again, back into the neutral zone, let's call it. And South African rand to finish off the currencies. Again, a bit like the Mexican peso, just plodding on upwards. A bit of a divergence there, so a bit of negativity. Nothing really to excite us there. And then into crypto, Bitcoin. What have we got? Well, we've had this nice run up for most of the year, and now looks like it could be stalling in this zone. Let's just have a look. So obviously we got pull back to 109 and then back up, and then recently pulling down. We've got some short-term bearishness across the board there. In terms of target numbers, we'd have to be picking on the highs there, 123k, and then next move up, if it does remain strong, 135 and then 142. But at the moment it just feels a bit, neutral, bit plain there for the moment. So just watch, I think, for a breakout. If it is negative, then it can break those lows there at 109.5. We could be talking 105 maybe as the support, and then we do have a lot of price action over there, so that wouldn't surprise me if that was a negative support zone for a pullback. Like I said, there's lots of opportunities there for buying the dips going forwards, and Ethereum that's been stronger over the last year really than Bitcoin. Again, it's that nice, we've got a nice wedge pattern building there. At the moment it's all very weak, as you can see, across the time and block size zones. Volatility around 61% annual. Just notice that difference between that and some of those FX currency pairs. Speculators all long. This one's a nice one for some Fibonacci analysis. We've got so many points to pick. We go a bit longer term. Let's get some big up numbers there to have a look at. 5,700 gets through those highs. Downsides 4,100 for a buy the dip chance. Well, then this next stage where you've got a lot of price action back in July time, that's at 3,500, 3,550. Again, another buy the dip type zone. So that's our two major cryptos. Then into some energy. Oil drifting down slowly, and again volatility quite low, 25%, whereas back in June we were talking 75-80%, and in April same sort of numbers. So quite low at the moment. Like I said, just drifting slowly down. Fibonacci wise, probably ranging between that $65.5, where you can see there support become resistance, support down. You've got double bottom down here, $62. That looks to be the range at the moment, and look out for breakouts either side. Large speculators, let's have a quick look at them, by the way. Looking bearish at the moment on oil. Heating oil, very correlated to the crude. Nothing there really. Nat gas, we do have some normally some strong seasonality play, but you can see if you're focusing on the chart there, this is a 9-year historical seasonality rolling number. It actually does start to weaken off now all the way through to February time before it picks them up again. Large speculators are bullish, so that's interesting, but recently short term has been bearish, looking like a move back towards those lows around 2.6, 2.67. Gasoline, what have we got there? Just coming off back to those lows. Watch out for the break of those obvious lows there around about 1.9. See if it can move further. Let's have a look at some potential downside there. If it does go lower, where could we be looking at? Probably 1.8. Looks like a decent call for the further downside if it can break those lows. Yeah, short term, medium term also bearish. Our long term indicator also they're bearish. Now onto the stock markets, and this and the Nasdaq, the S&P still flying high. No stopping them at the moment because I get obviously we are coming into a seasonal strong point, October through to the end of the year, normally good for the S&P 500 US stock markets. Shorter term at the moment, a bit flat. Start of the week, we see where we're going, but all the indicators still pointing north. And if we pick off some targets, we go longer term again. We'll have a quick short term look in a second. Actually, can't believe I'm saying it, in the 7,000, 7,200, the next upside target there in the longer term. Now, what you can do with Fibonacci is take these different key zones and create sub ladders around the ranges just to pick off new numbers to the upside. It helps give you some targets. So you can see 6,840, 6,900, the magic 7,000 number up in that ladder, potential upsides. And if I flip to the Nasdaq, you're going to see pretty much the same thing. Yeah, maybe even more aggressive at the moment to the upside. Off it shoots. Again, everything looking bullish there. Now, someone asked me to add the Nifty Indian stock market in on the NSE. I have done. And at the moment, I would say looking quite flat. I'm going to pull it back a bit so we can get some idea of some longer term history. In Easter time, started off pretty nicely on that up run there, but has since gone a bit sideways, coming up to the June highs nearly. Let's put on some Fibonacci. See where we could be going and heading in the Nifty. Pullback zone 24,822. Potential buy the dip. If breaks there, you can see a bit of noise there, price action noise there. That 61.8 fib hanging around at 24,200 to the downside, 23,800 if it breaks further again. But upwise, if we can get through those highs, what we're looking at 26,600 the next up move. DAX in Germany, I'll put that one on as well. Probably the major European stock market around at the moment. Let's just scroll back, not looking very exciting either as well. If I can line it up correctly for a start. Yeah, we'll go with that. Down move to 23.5, and then back to those lows at just 23,100, 23,000. You can see overhead support there at 24,000. Does like the round numbers. The old DAX, you can see over there on that Fibonacci too as well. So maybe pull back into this zone, looking more probabilistic. Over to Japan. Been copying the old US markets of late, but just pulling off there, weak overall in the longer term. Today and last few weeks, so we've got that pullback, but it's been a bit choppy, but still underlying it feels strong. In terms of volatility, about 20%, 21%. So that's our equity indices. If you're going to pick something there, you probably go with the Nasdaq. Looking at that Nasdaq 100. Then we've got some softs, cotton, nothing too much to talk about, looking a bit weak bearish. Coffee has been playing great of the second half of the year so far. You can see that lovely run up. Let's just see where that pullback might be heading. Well, it's just sitting on the 61.8% Fibonacci line, so now's its chance. So you've got that shoulder of noise over there, so that could be the new sort of range area for it to bobble around in to fill up before moving back to the 420 highs. But if that is a heads and shoulders pattern building, then we do have a back to the 310, 320 sort of numbers to look out for. Volatility picked up, as you can see, quite massively there over on the chart, 20% in the last week or so. So volatility creeping back in there on the coffee. Orange juice, again, it's a case of watching out for the hurricane season and these massive spikes, but at the moment all a bit in that trading zone. Cocoa heading weaker still. Let's see, give you some targets for the downside there. Further break here, 6150 potential downside this morning and the last few days. I said all week in there. Speculators definitely going shorter there. Volatility coming down as well. And sugar, what have we got? Looking similar to cocoa. Maybe not as bad, but maybe looking out for a break down south further. But feeling a bit more flat, weak, bearish than cocoa there. Into some other random stuff. So you got another sugar contract there on ice, number 16, not looking well, looking pretty neutral in that range zone there. Nothing to talk about them. To meats, live cattle and feeder cattle, both still rising, just pulling back a little bit. Maybe again some short-term profit taking. Maybe people looking for the buy the dip opportunity. That's live cattle. It's a very similar pattern in feeder cattle there. In lean hogs, we've seen the seasonal sell-off, and now we're seeing a predictable seasonal buyback in. Have a look at the seasonality down there longer term. You do get a bit of a climb and then sell-off and then that rise. You can see what we've just been through. That sell-off down there, that's the last 9 years, and it's almost very predictable. Speculators at the moment positioned long, so yeah, it could be on a bit of a recovery. Let's take, there we got that double bottom in there, creating some support. Interestingly, coming up to 99.25. See what happens at that zone. Is it gonna pull back or carry on and meet somewhere over there where it had more buying in? That looks like a nice up zone target there, 103 to 105 for lean hogs. Some more liquid futures here, dry whey futures. If you can trade them, they're looking like they're on the bounce. Milk heading down. So again, that's another one to get your hard to get your hands on. Lumber, on the other hand, can do a bit more accessible. A double bottom again in there, providing the support at 519, and we're coming back, pulling back to that 561 Fibonacci line. Seasonality wise, does pick up through October and November. Large speculators not so keen, looking like they're heading south, but volatility also picking up around 50-51%. Short medium term, call it looking a bit more sideways there. And then we get more into some grains. Canola heading down. Corn, one of the bigger grain markets. Let's pull that back. Could be feeling a bit toppy there, around the 430 sort of area. Look for a pullback to 400, 401. And what have we got? Soybeans, bit of a mess. Nothing too exciting. Probably call that weak, bearish at the moment. Seasonality, though, we should expect some buying opportunities though coming in, especially around the October time bottoms in there. So, you know, put soybeans on your cards for middle of October. Then oil, looking a bit weak. Again, nice one I reckon for the Fibonacci's. Yeah. Obviously got this area around 50. And it's 40, late 48s, 49, and then back to the lows at 46. If it does provide support in at this area, you can use the ladder to go back up, but it feels a bit rangy to the upside to that $53 area. All a bit weak in all the other zones, and large speculators pointing down. Seasonality wise, again, keep it on your cards to watch out for. Then meal, again, I think that's weak down to that 270, mid 270 area. Oats, looking at range bound, which it can do. Oats is a nice one to catch ranges on. You can see reversions from these different areas. It does bounce all the time using those Fibonacci areas, so it's a nice one if you can trade that. Rice, still feeling weak to the downside, weak bearish. And finally wheat, not too much to take from wheat there. If we're doing numbers, let's put on some Fibonacci's from that low we just had back in 12th August. Double top of that Fibonacci zone at 531, back into all that noise. The other charts showing it quite weak at the moment. Large speculators flattening out. I'm not looking so long at the moment. Volatility also quite low, around 17-18%. Wheat not looking very exciting at the moment. Seasonality is anything to pick up from there. Maybe call it wheat bullish. So not great there for the wheat market. Got a few questions coming in. Let's just quickly whiz through them. What is the point of using the EMA if you're stochastic if the settings are 111? The 111 is for the fast timing into the trend. The longer term filter is to confirm the longer term trend, so we're not jumping in on unnecessary short term trades. And some requests for Renko scalping strategies for Bitcoin. I'll see what I can do in terms of videos for that, and some new content. I'll have a think. I use a lot of auto actually in the Renko scheme of things, and Bitcoin and cryptocurrencies for that matter, I do a lot of automated, fall through trading on the cryptos because of low costs, and concentrate on those big 20 to 50 markets maybe. In the crypto, there's some good scalping stuff to be had there. So yeah, I'll definitely do something in the near future there. What Z-score settings using 20 on the Z-score. Vlad's asking, hello, are you trading on prop firms like TopStep? I do occasionally do challenges on the funded futures thing. I trade mostly my own money. TopStep, I've passed that one before in the past. Lilu is another one I've used. Quite a few. Again, if you look on the channel, I've done content on some of those and some tips and hints to how to get past them. But my Renko strategies work very nicely on the prop firm strategies, and I'm probably going to do some more content on that as well coming up over the next month or so as we head on into Christmas. But yeah, it definitely works nicely there. So that's the questions answered. Now if we head back to the picks, so what did we pick? Nasdaq, probably S&P, gold still looking pretty tidy there to the upside. Brazilian real we talked about as well, and quite a few nice actually range bound reverting type trades. So yeah, plenty for you to think about for the week ahead. Some other questions just come in. Bit difficult to set up a good Renko with stochastic. In my trading, I absolutely love the stochastic. I find it one of the best indicators, and even combinations of stochastics. We've got our Elite Trader training program on at the moment, and I've been going through those strategies with those guys, and there's some really good strong ones. It made me one of my best trading years of recent times. I got about 300% return in 1 year. That was very much led by stochastics, but there are also some very other good indicators, even just stuff like the Z-score for mean reversion, adding in other sentiment indicators like the VIX if you're on the S&P. So much good stuff out there to have, and the Renko charts just make it, for me, all the better. Oh, sorry, on their X platform, you're saying about stochastic, you're correct. Yes, it's not as good as it TopStep X for those things, because they use a derivative of TradingView, but they don't give you all the features. So you have to pretty much use your standalone TradingView charts to get your strategies and then just execute really in the TopStep. TopStep charts look nice, but they're just, like I said, the restricted TradingView types, so really execution only. So there you go. I think that's all the questions. Thanks again for joining me. Hope you've enjoyed the show. It's given you some ideas for the week ahead. More content coming your way. Lots of other products ideas. We've got the books out there. Visit the website www.thestophunter.co.uk if you want to get your hands on them. I said plenty more action still to come your way. So I hope you have a great trading week. Good luck with the trading. I hope the profits come your way. And again, this program runs every Monday, 12:30 UK time. So I hope to see you again, if not before, on the next Renko Edge show. So have a good week. See you later.